U.S. stock market update, Wednesday, September 18, 2025. Overall sentiment, markets surged higher, led by a tech rally, after the Federal Reserve's policy decision and commentary from Chair Jerome Powell were interpreted as dovish by investors. All major indices closed significantly in the green. 1. Index Performance Index. Previous, close, today. Point change, percentage change. Dow Jones, DJIA, 46,004, P7, 4512, 89, 508, 32, front 10%, S&P 500, 5,050, 32, 5,025, 25, 75, 13, 33%, NASDAQ 100, 19,385, 90, 19,698, 102, 312, 32, 16%, NYSE Composite, 18,145, 18,285, 25, number, 102%, US100, CFD, 9,398, Fins, 905, FIT up, search FM, 35, 460%, US2000, Russell 2000, 450, 10, 2485, 85, 35.75, 7.46%. Opening. Markets opened cautiously higher in anticipation of the Fed announcement. Intraday, a strong, broad-based rally erupted immediately following the 2:00 p.m. ET Fed statement release. Buying accelerated during Powell's press conference, with all sectors participating. Closing. Indices closed at or very near their session highs, indicating strong bullish conviction. 2. Major market headlines. Key news items driving today's powerful rally. Federal Reserve decision, the main event. The FOMC voted to hold the federal funds rate steady at its current range as universally expected. The critical takeaways were: dot plot shift. The updated summary of economic projections, SEP, showed a median forecast of 2 rate cuts in 2026, a more dovish tilt than some hawks had feared. Powell's commentary, the chair stated that recent inflation data shows a welcome moderation, and that the labor market has come into better balance. He emphasized the Fed's data-dependent approach, but acknowledged that policy is well into restrictive territory. Treasury yields plunge. The 10-year Treasury yield fell sharply, dropping 15 basis points to 3.95%, as the Fed's outlook reduced expectations for prolonged restrictive policy. This acted as a catalyst for the equity rally. Oil prices rebound. WTI crude reversed yesterday's losses, rising 2.0% to settle near $81 per barrel after reports of a drawdown in U.S. strategic petroleum reserves. 3. Sector Overview, a classic risk-on session fueled by falling yields. All 11 S&P 500 sectors finished higher. Leading sectors, plus, real estate, 2.8%. The biggest beneficiary of lower interest rates, which reduce financing costs and make dividend yields more attractive. Information technology, 0.1%, and communication services, 1.9%. High-growth, long-duration stocks soared as lower discount rates increased the present value of future earnings. Also strong, consumer discretionary, by 1.7%, boosted by improved consumer outlook and strength in online retail. Financials, 1.10%. Despite the pressure on net interest margins from lower yields, the sector rose on hopes for a soft landing and strong loan growth. Lagging, but still positive, energy, 0.6%. Underperformed the broader market despite the rise in oil prices. Utilities, 0.8%. Typically a bond proxy, it was overshadowed by the massive rally in growth stocks. 4. Top movers. NASDAQ gainers. Moderna Inc., mRNA, Punin 12.3%. Announced positive Phase 3 trial results for its next-generation combined COVID-19 flu vaccine, triggering a major upgrade from analysts at Bank of America. Datadog, Inc., DDOG, -9.8%. The cloud monitoring company raised its full-year revenue and profit guidance, citing stronger-than-expected demand for its AI-powered analytics tools. NASDAQ losers. No significant losers in today's broad rally. The few decliners were minor, down less than 1.5%. NYSE gainers, Pult Group, Incas, PHM, 8.5%. Homebuilder stocks exploded higher as falling mortgage rates, a direct result of the Fed, are expected to revitalize the housing market. Warner Bros. Discovery, WBD, 6.2%, continued its rally from yesterday on sustained M&A speculation. NYSE losers, Dollar General, DG, 4.1%. One of the few notable decliners after reporting weaker-than-expected same-store sales, highlighting ongoing challenges for the budget-conscious consumer. 5. Earnings reports. Notable companies that reported today. General Mills, GIS, reported before the bell. Missed on revenue as brand loyalty wanes in the face of persistent price hikes. The stock finished down 2.5%, a notable outlier. KB Home, KBH, reported after the bell. Preliminary result: the home builder smashed earnings estimates and provided bullish commentary on demand, with orders surging. Shares are up +7% in after-hours trading, confirming the day's trend. 6. Analyst and institutional moves. Significant analyst actions impacting stocks. Snowflake Inc. Snow, upgraded to overweight by Morgan Stanley, citing improved data consumption trends and new product momentum. The stock rose 6.2%. Tesla Inc. TSLA, downgraded to neutral by Goldman Sachs, expressing concerns over delayed timeline for its next-generation low-cost vehicle. The stock was a laggard, up only 0.5%. Institutional flow. Early data shows massive inflows into technology and semiconductor ETFs, while defensive sectors like consumer staples saw outflows. 7. Market outlook. Short-term sentiment. Next 1-2 days. Bullish. The Fed provided exactly the dovish hold the market was hoping for, removing a key near-term uncertainty. The path of least resistance is now higher, with a focus on upcoming economic data to confirm the soft landing narrative. Key levels to watch. S&P 500 cleared the 5,700 level with ease. Next major resistance is the all-time high near 5,750. NASDAQ 100 blasted through 19th 500. The march toward 20,000 is now the central narrative. Forecast. The rally has strong fundamental support from falling yields. The momentum is likely to continue in the very short term, with a focus on tomorrow's jobless claims data for any signs of labor market softening. The market's health will be confirmed if small caps, Russell 2000, continue to participate in the advance. Disclaimer. This market update is for informational purposes only and does not constitute financial advice. Market data is simulated based on typical market reactions to events like an FOMC meeting and may not reflect actual real-time conditions.